Hey everyone, it's your real estate geek here, Andrew Finney. Today we're going to be chatting about the minimum credit score requirements for each loan type. Just so you know, each loan type we're looking at a VA loan, an FHA loan, conventional, and USDA. To tell us more about those minimum credit score requirements is Bill Marin with New American Funding. He'll be coming on next. If you haven't already done so, please go ahead and give us those thumbs up, subscribe now, and tell us what you're thinking in the comment section below. Let's get going. Bill, thanks for coming by the office today and telling us more about the minimum credit score requirements for the different loan types.
Yeah.
Please go ahead and tell us about it.
Yeah, as always, Andrew, thank you for having me on the show today, guys. And my name is Bill Marin with New American Funding. And like Andrew mentioned, there's really 4 types of just main loan programs, like the core group. You're looking at number 1, VA, then you've got FHA, USDA, and conventional.
Okay, so it's probably really important right about now to let them know that the VA, FHA, and USDA are government-insured loans, right?
Correct, yeah.
And the conventional isn't.
Yeah.
So with that in mind, let's go ahead with no further ado. What are the credit score requirements?
So with the government-insured loans, the government-backed loans, you're looking at the, like Andrew said, the FHA, the VA, and the USDA, you're looking at a 580 typically minimum credit score requirement.
Awesome. So the only one that's not a 580 is the conventional, right?
Yeah, so conventional, guys, you're looking at a 620 minimum FICO score with most lenders. However, when it comes to your interest rate and minimum down payment required, it's really not as sexy of a loan if you've only got a 620. So depending on your scenario, it might be a little different.
Okay, great. Really appreciate you sharing that. So, Bill, now they're ready to get. They're in the process of getting ready to get a home loan, or possibly, maybe they're watching this video for any other kind of loan they're looking for right now. Yeah. What are 3 ways, 3 quick takeaways they could use today to boost that credit score?
So the first thing is really just to be proactive on paying your bills. I mean, pay your bills on time. It's
no
one of those things.
Right?
Yeah, it's just, and then we get, and we understand because we've all been through it. Like you forget to pay a bill, crap, all of a sudden you got a 30-day late or an $18 medical collection. So really just pay your bills on time, because if you are applying for a mortgage and you're going to be buying a house, we run your credit in the beginning, and then we run a soft pull right before you close to make sure you didn't go out and get any new debts and forget to pay bills.
Good stuff. So what's takeaway number 2? So
takeaway number 2, guys, is if you have any open collections, you currently owe for medical or other things, credit cards, stuff like that. If you got those open collections, don't just go ahead and just pay those things off. Some lenders might recommend that, but don't just go ahead and just do that immediately if you want to get your scores up. What you want to do is you want to try to get what's called a deletion letter. Deletion letters, it can be done by just being a little bit strong-willed and strong-worded on your part when you call those collectors. You might have to get through to management. You might have to do a little bit more legwork on your end. But if you can get a deletion letter, even if you've got to pay the full amount they're saying that you owe, which might be above what the original amount was, if you can get that deletion letter and get that to your lender, we can do what's called a rapid rescore and get them the credit scores within about a week.
Great. I really appreciate that one. So what's number 3?
So number 3 is really the fastest and the easiest way to get your score up. And guys, this is going to be regarding your credit cards, paying down your balances on your cards. If you've got, it doesn't matter how large the credit card is. If the credit card is a $20,000 credit card with a huge balance, or it's a $500 card, they essentially affect the credit about the same when it comes to the ratio to limit, right? So you want to keep that your balance to limit ratio of 30% or less of what the limit is on the card. So simple math, if your credit card's got a $1,000 limit, you want to have your balance on that card at $300 or less.
Great. You know, Bill, I really appreciate you coming by and sharing these awesome tips with us today and really simplifying it in this today's really quick video. So if they're out there watching right now and they want to contact you, they have some questions about credit scores and getting a home loan, how should they reach out to you?
So guys, there's a few ways. First thing you can do, you can pick up the phone. You can give us a call on that phone number right there. You can shoot me a text if I don't answer. Also, the easiest way, guys, is to go to that website right there. Click on the application, complete the application. Usually can be done online in about 10-15 minutes. We can get the credit run from there and kind of get the ball rolling.
Great. Well, Bill, thank you again for coming by the office today. And if you haven't already done so, please go ahead and give us those thumbs up and subscribe now. Tell us what you think in the comment section below. We're looking forward to catching up with you again soon. Enjoy an awesome day.
Thank you.